Welcome to the Property Corner with myself, Rowan Alexander. In our previous episode, we spoke about the distressed sales and how they are rising in South Africa. In today's episode, I want to give some advice to people who may find themselves in financial distress. Today's episode is going to be useful if you find yourself in distress and unable to repay your mortgage bond, but it could also be of value to people who are looking to preemptively provide some level of comfort for themselves in the face of rising interest rates. So let's have a look at how you can soften this blow of rising interest rates and maybe create some time for you to make adjustments in your lifestyle or to sell your home or to settle some of the debt that you're having trouble paying. The reality of the fact is that we've had successive interest rate hikes over the past 3 years, with only the last two meetings where interest rates have remained unchanged. This may have put you in a position where you're struggling to repay your mortgage bond, or you anticipate that if rates were to rise further, you would struggle even more to make these repayments. So we're going to try and have a look at how you can reduce your mortgage installment. I think this is the most important thing, is that property actually allows you to reapply at a later point in time to reduce your installment. There's a number of ways in which you can do that. But if you find yourself, if you're already in distress, some of these tips might not be that easy to execute, but have a listen and check them out and see whether there might actually be something which applies to you. So the first thing that you can do is to apply for a new interest rate. If at the time of purchasing your property compared to today, your credit risk has changed and it's become more favorable for you, you may actually qualify for a reduced interest rate. Things to take into consideration would be the loan to value on your home. Your home may have increased in value, making your loan percentage less than what it previously was. In the same way, you might be earning more income that you previously had, or expenses. Even though your expenses would have increased, some debt payments may have fell away, which would allow you to get a better interest rate. By reducing that interest rate, you're effectively going to be bringing down your mortgage installment. And if you find yourself in distress, or if you anticipate that you're going to be in distress, that's the only thing that you want to do at this point in time, is to try and extend that period of going into distress, pushing that out further and further ahead, which would give you enough time to sell your property in a natural way without it actually having to go to auction. If it gets to a point of going to auction, the reality is that you're probably not going to get a market value for your home. So all the efforts that you want to be putting in should be just to allow yourself more time. At this point in time, more time is going to allow you to sell your property naturally. The latest F&B property barometer says that properties are taking between 11 and 12 weeks to sell in the current market. That's assuming that your property is correctly priced. So if you find yourself in distress, please price your property correctly and try and ensure that you have 12 weeks for the property to actually sell. So if you'd like to renegotiate your interest rate on your existing mortgage loan, it's best to get in contact with your own bank where you currently have a mortgage loan and speak to the home loan division to find out how you should be going about that. In the same way that a reduced interest rate would reduce your actual installment, one of the bigger ways and more effective ways of getting that installment reduced is actually extending the repayment period. Now, while the first thing that people are going to criticize is to say, well, Rowan, you're going to be paying more total interest over the loan period. That's a small price to pay if you find yourself in a position of distress, or if you want to create some financial comfort for yourself. So if you have a home where you initially had a 20-year loan term and you may have repaid 5 or 10 years of that, you can actually renegotiate the payment term and have it either reset to its original 20 years or possibly even an extended period of 25 or 30 years. By doing that, the outstanding balance will be spread over a longer period and thereby reduce your monthly installment. Just remember that the negatives of doing that is that you will pay more total interest over the loan period. But again, if you find yourself in distress or if you'd like to reduce your monthly costs just to get through a certain period of time, this could be one of the most effective ways that you could do it. The next thing that you could do, and this is more relevant for people who are already in distress, is to apply for a payment holiday. If there was something that we saw during the COVID-19 pandemic, was that the banks were willing to engage in payment holidays. Yes, they added your outstanding payments to your outstanding bond amount. So you never got the debt. You never got the debt written off. But again, it was your payments for a certain period of time were effectively paused, and you were granted time at the end of your loan to make those repayments. So what this then again allows you to do is to actually go through the process of selling your home naturally in order to avoid it going to auction. So applying for a payment holiday, while it may be a process which seems daunting or something that you don't really want to get to, and it might feel like a moment of defeat, I would encourage you to actually do that. Apply for that payment holiday and then get your property in the market to get it sold as quickly as possible. That payment holiday need not be for the full amount. You could even negotiate with your bank to pay a lower installment for a certain amount of time before it resets to the full installment. So if you believe or you have circumstances where things will be improved in a number of months' time, that could be a very good option for you to retain your home for a set period of time. One of the other ways in which you can sort of soften this blow would be to use savings. And I know this is going to sound a bit silly to say, well, Rowan, if I really can't afford my repayments, why should I, how can you assume that I would have savings? But you'll be surprised to find how many people have saved for the rainy day, but they're too scared to use it because they don't know how long this sort of rainy season would be. So they find themselves defaulting on their mortgage loan payments or on municipal accounts or whatever, but they're actually sitting with savings in an account. You've saved for this day, you've prepared for it, you've tried to put away emergency funds. If you're at this point where you need it, you're going to have to start making use of it. The last bit of information that I'd like to give is surrounding FLISP, the finance-linked individual subsidy program that we have in South Africa. This is a government project that's targeted for the gap housing market, and it's for first-time buyers who have a gross joint income in their families of between 3,500 Rand and 22,000 Rand a month. There's a government subsidy that they could potentially qualify for. Whether you're an existing homeowner or a new home buyer, the government has made subsidies available between 30,000 Rand and 130,000 Rand as a once-off payment and contribution towards your home purchase. If you've bought a property recently, you may potentially qualify to apply for this subsidy retrospectively, as long as this application is lodged within a 12-month period of you actually registering that mortgage loan. So if the government is able to pay you a subsidy, the subsidy will be paid directly into your home loan, and it will afford you the opportunity to go and renegotiate your interest rate and your loan term, like we've explained in prior steps, because your loan would be reduced, which would free up some money for you to be able to renegotiate better terms with the bank. If you'd like to know more about the FLISP program, you can look up the National Housing Finance Corporation and FLISP applications. There'll be a whole bunch of resources guiding you through that process, or get in contact with a mortgage originator who can assist you to make this application. If you'd like to make use of these tips and advice to buy yourself some more time or to create more financial freedom, reach out to us and we can put you in contact with the right people to assist you in your specific needs.